Good afternoon, everyone. Welcome to today's webinar on the 3 ways to control shrink as part of our Profit Leader Masterclass series. I'm Christy Speed, Marketing Director at FMS. Before we dive in, here are a few quick notes. This session is being recorded and will be available to you on our YouTube channel for viewing later on. Doug has a lot of really good information to share, so he's going to use the whole allotted time for his presentation. So feel free to contact him with any questions after the presentation. I'm going to go ahead and add his email address to the Q&A section, so you'll have a direct link to that. And don't hesitate to express your thoughts with the reaction button. Now I'd like to introduce our speaker, Doug Haworth. Doug has worked in the grocery industry for over 35 years. During that time, he worked his way up from carryout to vice president of operations. Doug joined the FMS team in 2022, bringing not only his knowledge of grocery operations, but also his knowledge of the customer side of FMS and GOT Systems. GOT Systems, which stands for Grocery Order Tracking, provides retailers with solutions to help run more profitable stores. Welcome, Doug.
Thank you, Christy, and thank you for everybody that's joined us today. As Christy said, we have 30 minutes. I'm going to do the very best that I can to stick to that 30 minutes. So if I run a bit late and you need to drop off, totally understand. And Christy will be sending a link to the video shortly after. I did receive the topics for this as 3 ways to reduce shrink. And I thought, I don't know if I can just do 3. So I broke it down into 3 areas to help reduce shrink in the store. We're going to look at measuring shrink, getting what you expect, front-end operations. And at the end, we have one bonus idea. So there's a lot of us on the call today, and we all may have a little different way of talking about shrink and measuring it. The description I've always used on shrink is the difference between what you expect to receive for an item to what you actually receive for that item. So for this example, it's a bakery cake. It's $20. We think we're going to get $20 for it. That's what we bill our gross profit expectations off. Everything we're expecting to get $20. I stumble, I drop the cake, and now we got to throw it away. We just had $20 in shrink. So when we talk about managing shrink, reducing shrink, the first step in any process of managing a process is being able to measure it. So if we're not measuring shrink within our store today, that would be what we mark down. Anything that's marked down or anything that's thrown away in the store, given away, it could be considered shrink that we need to track. And we have found that retailers who measure shrink tend to put more dollars on the bottom line, a higher bottom line percentage, because they know what they're shrinking out and what they're throwing away, so they can make adjustments. When we talk about shrink, most of the time we do talk about it as a percentage of sales. When we look at the chart we have up on the screen now, this comes from the FMS NGA independent financial survey of grocery retailers that we put together every year. We're looking at the 2023, so we have 2022 and back data. I believe our 2024 survey will be coming out in the near future, but I would expect to see shrink being close to where it's at today. We hover as an industry right around 3%, and when we look at the years gone past, we dropped down. Of course, 2020, the year of COVID, we dropped down to, as an industry, as a 2.5 shrink. Of course, we were selling everything we could get our hands on, throwing very little away, very profitable years. As we come out of COVID, shrink goes back up to where it was prior or a little bit higher. So as we look at shrink, we do realize also that there is an acceptable amount of shrink in the grocery business. If we had 0 shrink, that means we're probably missing sales. Maybe we reduce everything we have on the sales floor, the sales space way too much. We're running out of product instead of having what the customers want to buy and having some shrink. So shrink's not necessarily a bad word or a bad thing in grocery, but too much shrink certainly is. So there's many different ways you can measure shrink. If we're not doing it today, a good way to start is possibly having every department write down everything that's being thrown away or marked down. Yes, it's labor intensive, but it's a place to start. And when we talk about starting a shrink program, starting to put the emphasis on shrink, one of the things that we need to teach in the store is no one's in trouble for shrink. No one's going to be in trouble if we're throwing away too much. Now, once we have that data at store level and we know what's going on, then we need to make better decisions and help reduce shrink. But if I get in trouble for my shrink being too high, if my district manager comes down on me, and okay, I can fix that. I just stop measuring it and my shrink's better. However, you pay for it in gross profit. So it's something that we've got to teach the teams, be honest, let's record everything, and let's figure out what's causing the shrink. Another way to record shrink at store level would be setting up a register and training, scanning everything out before it gets thrown away. With the first couple instances, you're at least starting someplace, but someone's got to take that information, put it into a database somehow to look at the data. There are many systems out there that can help measure shrink and report on shrink. That puts it right in front of you. And what we find is retailers that make higher profits tend to use that data as to what they're shrinking out, look at the reasons why they're shrinking them out, and make decisions going forward. So I couldn't talk about shrink without talking about inventory a little bit and turns. And when we talk about turns in a grocery store, it's how many times I turn my inventory on hand each year. So as we look at last year's survey, we see a typical grocery store turns their entire store about 18 times a year. You can see in the perishable departments, it's much higher because we carry less inventory and we sell it faster. But we do know that a majority of shrink comes from over ordering or overproducing products. So when we're looking at our turns and we're looking at inventory on hand, we've got to verify, how much floor space do we need for the products that are on the floor. And example, we'll go back to bakery, and it's thaw and sell bakery items. It's a case of cakes that's frozen, and maybe there's 6 in a case. If I put all 6 out on display today, they all have the same date. Maybe they're good for 7 days out on the sales floor. At the end of 7 days, I throw 4 of those away. We sold 2. But it makes much more sense if maybe I put 2 or 3 out on display. Got to make my tables look right, got to make my displays look right. But I keep the rest in the freezer where they're still good. I'm not wasting days on them. And I stock less more often. I put less out, but I do it more often. So if I walk by midday and we've sold a cake, hey, great. Next time I'm going to the freezer to pull a little bit of product, I'm going to pick up one of these cakes, date it, and put it out. And it's much smarter way to handle the inventory that we're putting out. So again, a lot of shrink comes from overproduction, over ordering. If we have inventory in the back room, in a cooler, or in the freezer, it's going to get damaged. It could go out of date on us in the back room. So we need to look at our orders, and are we being concise with our orders? If you join us back here on October 16th this year, we'll have a master class about optimizing ordering, and we'll talk a little bit more about turns and inventory at that point. So first step in managing shrink, one, we got to measure it. Next step is getting what you expect. And what I mean by that is to help control and reduce shrink in a store, we've got to know that we're receiving all the product that we're paying for. A phrase that I've used most of my retail career has been, I want to get everything that I pay for, and I want to pay for everything I get. It's a good business practice. It's not about trust. It's not about I don't trust anybody. I've got to check it. No, it's good business practice to make sure we're getting everything that we're paying for. And when I talk about that, I talk about backdoor receiving, such as DSD vendors coming in. We're going to check in. We're going to talk a little bit more about that. Also, warehouses, where we get our main groceries, our produce, our meat department. Any warehouse that we buy product from, we should be checking in all those items. When we talk about the highest earners, highest gross profits, highest bottom lines in the retail business, we see retailers who have a process in place to check in their warehouse trucks. Now, as I travel the country and I get to visit a lot of stores and a lot of warehouses, I can say the warehouses are great business partners, and they would never do anything on purpose to short a truck or pick the wrong case, but we all know that could happen. So, you know, we need to check in those trucks. I understand. I hear a lot of excuses as I'm traveling around, and I say excuses because I'm very passionate about this part of checking in warehouse trucks. It could be I'm a small store. I don't have enough people to check in that truck. Or on the other end of the spectrum, I'm a high volume store. I get a couple of trucks a night that we've got to stock. There's no way we can check it in. And there's ways to figure it out. There's processes that can be put in place, because if we're not verifying that we're getting everything we're paying for, then we don't really know where the issue could be. It's hidden in the shrink. So again, on backdoor receiving, we're going to talk about a receiver. Typically, you've got a receiver, a receiving manager that would check in vendors. The warehouse trucks, more than likely, it's more of a team event. Maybe that receiver has oversight of it. Maybe it's an assistant manager. It all varies by how your operations are set up. And store to store transfers, if I'm a store manager and I'm transferring product to another store, or I'm receiving product from a sister store out there, I want to check it in, make sure I've got it. Department to department transfers. If we think about the deli, and maybe today is, that we're making tacos, and I go to the meat department, get ground beef, I get lettuce, I get tomatoes from produce, I get cheese from dairy, I get all the makings, I take it back, I plan on writing it down. Although when I get back to my department, the counter is full. I jump in, start helping customers, and then I come back, start making the tacos. I don't even think about it. So that would inflate the deli department's gross profit, 'cause they're selling product that they didn't actually pay for, but it's going to deflate the other gross profits. So need to have processes in place, of course, for department to department transfers. When we look a little bit deeper into backdoor receiving and best practices, one, we've got to have a written receiving guideline. What you expect from me as a DSD vendor and what you expect from your receiver. We're going to talk more about that in just a minute. Got to have trained and accountable receiving personnel checking in these receivers. We've got to hold store management accountable to follow guidelines. That's no different than a lot of what we teach store managers to be accountable for. It's just that the backdoor receiving is so key to the success of your store. We've got to make sure that store management's involved. And then with most things that we handle from a management perspective, is let's have a checks and balance. So if we look at some receiving guideline examples, I picked some of the top ones out of different receiving policies that I've come across in years past and while visiting stores. First step on having a receiving guideline is to have a training process in place. I say a certified receiver. That what I mean by that is that the receiving team in your store goes through a program where it's written, it's a PowerPoint, it's on a computer, whatever vehicle you use to do training. There's a test behind it, and me as a receiver, I go through the testing. I've got to have a passing grade. Maybe I have an interview with the store manager, assistant manager, and all this is to certify and to teach the receiver of how important they are to the success of the store. So have that training in place. Another best practice would be to have receiving conducted in a specific location in the back room. You could draw a box on the floor, you could paint it, you can have signs, whatever, to designate this is the area that all receiving's done in. And the reason you do that is because that area needs to be on camera. And you're using your cameras. If there's ever discrepancy, we're going to talk about audits in a minute, but you can use your cameras, go back to them and see what happened. If there's ever anything to follow up on, it's a great business practice to be able to verify, to check in what you expect. The receiver opens every box and counts every item. Now, when I'm in stores, I'm training this, or I'm talking to stores about this, I get pushback on that sometimes too. We're a large volume store. We'll get in 150 boxes of chips at a time. You expect me to open every box? Answer is yes. We've got to dedicate the time to do that. We've got to make sure they're trained to do that. I open every box. the vendor can open the box, but I need to do the counting as the receiver. So I got 2, 4, 6, 8. I count them all. Every box is open. We're doing this again to verify what we expect and that we're getting everything that we want, that we're paying for. The receiving doors stay locked. And when I say receiving doors, that's the door you walk through, and also the roll up doors for trucks unloading. I'm the receiver. I'm in charge of this back room. Those doors stay locked unless I'm right there and the door I'm opening it to let someone come and go. I don't walk away from the back room and leave a door unlocked. Another best practice is to post your receiving hours so the DSD vendors know when to show up and what to expect, and take it a step further and post your receiving policies. I see a lot of retailers that will share their receiving policies either through email or they mail them to all the vendors that they deal with once a year or anytime something changes, so there's no surprises. One more on the best practices on receiving. And again, this is just a sample of what you expect to see in a receiving guidelines. But credits are processed first and removed from the store before any fresh products brought in. So if I'm a bread vendor and I come in Monday morning, I may bring an empty rack in with me and go to the shelf and pull down the shelf, straighten it up, pull any product that's outdated, damaged. I look for any damaged in the damaged area. Now, if I left inventory in there on Saturday to fill the shelf, I'm going to pull that, fill the shelf also, work through that inventory before I make my order what I'm going to pull off my truck. So a couple of things there. Anytime that you have vendor that leaves inventory with you, it's in the back room, it needs to be kept clear of the receiving area. That way it can't get mixed in accidentally. If it's close to the area, we don't want to see it actually get pulled into the receiving area to be paid for again. So keep those separate. And then when I'm the bread vendor again, I bring my credits back and the receiver checks out the credits. We process that credit through your system, whatever system you're using there. And then I bring in the fresh product and we check that in. You're verifying that you're getting credit and you don't have to chase a vendor to get credit later. So I understand some of the things I talk about here are a little bit time consuming. The better your team's trained, and there are times you may need two receivers at the same time receiving. We don't want to slow down the DSD vendors. However, this is our business, and this is what we need to do to make sure we're getting everything we're paying for. So when I talked about a trained receiver, we've already talked a lot about the training program, certification program, but let's train several receivers. I've seen this work in several different ways in companies, and it could be that I have 2 or 3 trained receivers, and I work them on a rotating schedule, and they work maybe different days every week, and maybe I work Monday, Wednesday this week. My other days of the week, I work in produce, I work in the pricing department. I do whatever needs to be done, and one of the other trained receivers steps in. We do that because we all have vacations. We all get sick from time to time, and we may need someone to step in and take over a day. And if I was trained 6 months ago, I received for a day and that was it, I'm not going to be very sharp at it. So if you keep a rotating schedule, keep 2 or 3, and it all depends on the size of your store and the volume and personnel, but have those backups ready to go. The other thing about having a rotating receiving schedule would be it helps keep me, the receiver, from coming buddy with the vendors I'm checking in. It could be, oh my gosh, yes, no, that's Doug coming in the back door. I don't need to check in his bread because he never makes a mistake. I'm just going to sign his invoice, go on. I know him. By keeping a rotating receiving schedule, we're going to avoid doing a lot of those issues. Accountability. Store managers have to hold the team accountable, especially when we're talking about receiving. The standards are what you lay out for your program, and we follow up with receivers daily. Check in, hey, how's it going? What's the biggest issue you had this week on receiving? What's your biggest problem that I can help you with? And it could be that Well, I've got an ongoing issue with this certain chip company not doing this, this, or this. Store manager says, "Okay, thank you. You keep your task going with them, hold them to our expectations. I'm going to call their DM and we're going to talk about this. Let me help you through this." So hold them accountable, back them up, daily follow-ups. There are times I'll be in stores and I'll talk to receivers and just ask questions of how often do you see your store manager? Not very often. We don't talk that much unless there's a big problem. I go to them. So that's part of holding them accountable is make sure they're part of the team. Any good program, great program is going to have checks and balances. Let's do random audits. A great way to do random audits is by reviewing video. And I've seen different retailers set up, different days. They're going to do, okay, I'm going to do 16 audits this week, and I'm going to do 4 on Monday, 4 on Wednesday, and 4 on Saturday, and then 4 on Friday to make sure I get them in. And it can be what you'd call planned randomness. I plan to do so many audits, but I'm going to mix them up throughout the days, throughout the hours of receiving and throughout the different receivers. And when I do an audit, I follow back up with a receiver. Hey Doug, thank you so much. I watched four vendors that you checked in yesterday. You did everything absolutely perfect. I could tell you were opening boxes. I could tell you were counting the items. The steps that you go through. Or if there's an issue, Doug, I watched 3 different receivings on you yesterday. 2 of them you did exactly like you should. However, with a pop vendor, this didn't happen. And let's talk about it. How can we fix it? How can I help you make this easier, make it better for you? So by giving feedback, you're going to get more involvement with them. Um, scorecards again, that could be a topic on itself that we talk about another time. But quickly, if you're able to scorecard any job in or any expectations in your store, if I expect this to happen by this day every week, and you're able to give a scorecard back to the team, and what we're talking about is receiving. Typically, when you see an employee survey of why employees are at a job or what they like best about the job. Of course, we're all here for a paycheck. We understand that, but if we dig a little bit deeper, then we get into I want to know as an employee, I want to know what my boss expects of me. I want to know how to do it, so train me, please. And then 3, I want feedback on how I'm doing. A scorecard is something that you could do with an employee to give them constant feedback, and it helps you be a better manager. A couple of things I want to touch on real quick before we leave the back door is physical security. If I'm your receiver, I come in today, I should check the keys out that I need to do my job today from the cash office, from the manager's office, wherever they're kept. I shouldn't come and go. I shouldn't be taking keys with me. And reason being is because the store needs to have good key control processes in place. And part of that is knowing who has the key at at any time throughout the day. Um, Another thing for physical security on the back door, let's not store any products by the back door, including the roll-up doors. And when I say products, not just sellable products, but even supplies, anything that can be easily picked up and put on my truck as I'm unloading, and maybe someone's not watching me close enough. I know there's a lot of us on the call today, and we probably all have lots of horror stories of what we have seen happen in the back rooms and what's walked off. One of the best things I found over the years is to have a product-free zone, nothing within 8 foot of this door. And it all depends, again, on how the back room's set up and where you need to move the products. But let's not make giving people the ability to make bad decisions easily by just picking up something and walking out with it. Another thing on physical security at the back door, if in the afternoon receiving's done, those doors should be shut and locked and not opened. I know some stores may have to take trash out. Okay, we understand that's an exception, but the roll-up doors shouldn't be opened. A lot of alarm companies that monitor your stores for alarms can put contacts on those doors. A lot of the doors already have them, but a lot of alarm companies can build in queries into their system to alert you to any time a door is opened outside of a predetermined time. So if you say receiving closes at 2 o'clock, this door should not be open until 5 a.m. next morning. So tell me anytime from 2 p.m. to 5 a.m. that this door is opened. And a lot of alarm companies can do that. Camera companies might be able to do that in this system, maybe able to send alerts to phones. Technology today has a lot of solutions to help us keep good physical security of our stores. So jumping up from the back door to the front door, we're looking at front end operations can impact total store shrink by as much as 20%. 20% is a lot of your shrink, but if we think about it, when we think about back door, everything you're paying for should be coming in through the back door. That's why it's so important we check it in. But everything you sell should be going out the front door. And so that's the two areas really concentrate on. 20% is a lot. I've seen different surveys that break it down in different ways, but if you look at it, that would include fraudulent returns, refunds, cashier, cash office service desk theft. And a big one a lot of times is cashier mistakes being made. They don't intentionally do it, but at the end of the day, it costs your store money. So to help combat this, we look at cashier training program, again, well written, well documented. The retailers that have great success with this training program throughout the entire store establish that we're talking about cashiers. Every cashier that comes to work for us will go through the training program. Maybe there is a job shadow with a cashier. Maybe there's a mentor coach assigned to them, but we don't short that experience for them, even if we're really shorthanded. I know there's times that we're shorthanded. We may bring in a couple of cashiers, throw them on the registers, and just hope that they do well. Well, we're setting the cashier up to fail, and we're setting the cashier up to give less than great customer service to our customers coming through their lanes. They don't know what they're doing. They don't have confidence. Let's not do that to anybody. Let's have a great program put together with training and follow-up. Ongoing training should be included, whether that's, if you have a head cashier, a head clerk, assistant manager, different levels at different stores would do the ongoing training. If just one quick call out on cashiers, POU, produce identification. A lot of times we hire cashiers and train them, but they may have never actually grocery shopped before. Maybe someone else has always done the shopping and they haven't done their own shopping yet. So they may not know all the produce. So produce identification should be an ongoing training with cashiers. And if you look at it, just to put another note on that is the difference between regular produce and organics. If I ring up a bag of oranges and I don't look to see if they're organic and I just use the regular orange POU, I could cost the store several dollars just on that one item. So that's why cashier training is so important. Again, I'm going to say feedback's very important to let cashiers know how they're doing. The next step in front end is cashier monitoring. There's a lot of systems out there that help monitor cashiers' transactions and their performance. If we look at our own POS system in the store, there's a lot of times there's analytical tools built into that POS system that will help me identify some areas of concern that maybe I need to look at and follow up with. Look at my camera system to see what's really happening. I call out just a few here. I want to talk about real quick penny rings. Penny rings could be what I've seen a lot. Produce being penny rings means sold for less than a dime, 2, 3, 4, 5 cents. And I've got the bag of bananas in this hand. This hand I'm keying in the digits. And there's a little bit touching the scale, just enough to trigger the scale. So once I hit enter, it rings up 2 cents for the bananas. It should have been $2. So you're looking for penny rings. What's causing it? How do I better train? Anything that's a negative transaction, or negative items in a transaction. It could be deposits on glass milk bottles. It could be refunds. It could be error corrects. Things like that. What's causing these negatives and which cashier has the most of them? If we have open department hand keys open at the store, meaning I can go up and key in 99 cents produce and send something through, and there's no intervention from a key flick or a manager involved, not trying to slow down your front ends, everything should scan, and maybe there's a lot of work on the front side we need to do to make sure everything scans through. But if open department hand keys are available to me as a cashier, You may be opening a door for me to make bad decisions and sweetheart, lowering the price for my friends when they come through. Instead of ringing up that T-bone steak, I hit 99 cents meat and send it through. So those are areas to look at. I did put self-checkouts on here. Self-checkouts could be their own master class. We could talk a lot about them. I know it's very controversial right now. Some retailers are actually taking self-checkouts out because they feel they cause too much shrink. But I personally feel self-checkouts have a place in the grocery industry. And I feel the very best way to defend against shrink at self-checkouts is personality. And it's personality of that attendant that's working the self-checkouts and interacting, engaging with the customers, helping them with POUs, making sure everything's coming out of the carts, things like this. If we have a clerk that's working the counter or working the self checkouts that's standing back off to the side, playing on her phone, talking to a friend, not paying attention, not only are we probably incurring too much shrink in the self checkouts, but we are also missing any type of customer service that we can help with that customer. So, I'm going to say a receiving area manager is one of the highest level positions in your store. Of course, we know store manager has the duties. We have system managers, department heads, but when we look below that, receiving area manager is going to be right up there, probably in my top 5 of important people in the store and making sure they're well trained and managed. I'm going to say the attendant that handles self checkouts is right in there also, and there's going to be multiple people trained there. But self checkouts can be a area of shrink, or they can be a big benefit for your stores. Bottom of basket, not going to spend a lot of time on this. Everybody understands everything's got to come off the bottom of the basket, whether it's the carry out picking it up. Some retailers go cart to cart. Some cashiers can see it. Bottom of basket can cost your store a lot of money if we don't have a process that can be managed in place to make sure we're pulling everything off the bottom of that cart. Refunds, returns, again, you're going to look at the analytical tools in your POS system. You're going to run reports. What's being refunded in my store, how much, how often, if something doesn't look right, let's check into it. But on refunds and returns, I think that's a great area for the highest ranking store manager on duty to be able to be involved in a high dollar refund. What's high dollar at your store? Could it be $5? Could it be $10? I'm not sure. It could be anybody that has a bad product they're returning that they weren't pleased with. Service desk clerks can handle this and process it, and there's a lot of great service desk clerks out there. It's great at customer service. But if possible, let's get the store manager involved to have that touch point with the customer, and win that customer back if they got maybe a bad product in the store that needs to be corrected. So let's look at returns. Let's look at refunds. Okay, I think I'm running a few minutes late here, but just recap. We've got to measure the shrink. We've got to manage the back door and the front door. We will have more master classes going forward that we can expand more on shrink, but there is a lot to do there. The bonus idea is get your team involved. This can't be just the management of the team. It can't be just the management of the company, but getting your team involved and making it a team sport, make a game out of it. You've got to teach them what shrink is. Then you got to teach them what you expect and how they can. I'm the newest carryout that just started. How can I affect shrink in the store? How can I help eliminate shrink? I'm a 35-year employee of the store. How can I help? What can I do to help out? Get them involved, but then give them updates of how shrink's going. This means something different to everybody that's on this call. Some retailers aren't good with giving out numbers. That's okay. Turn it into a number of items throughout the day that's been thrown away. Instead of a dollar amount, maybe yesterday we threw away 217 items. Let's reduce that today. And here's ideas of how to reduce it. But make a team event. So how can FMS help with everything we talked about today? We do have systems available that can help with a lot of this. We have systems where you can mark down items, print off tickets to put on a product so you can sell an item before you have to throw it away. We're able to give you back reports that show exactly what's going on in your stores, especially if you're managing several stores or you're not in the store every day, you can get those reports. We have a portal that's coming out soon where you can actually view that data online. So we can track shrink from all departments the same way. You can use our system to conduct inventories. I spoke earlier that inventories, retailers who make more money, a higher profit, have great control, great inventory control. You can use our system to conduct your own inventories and have that. And of course, as FMS, we have full accounting, payroll, tax services. So if there's anything we can do to help you with this, reach out. We'll get you in touch with the right people. And speaking of the right people, come back in June. John Klein, he is our Chief Relationship Officer. He knows accounting forwards and backwards in the retail industry. And he's going to be talking about balance sheets and using balance sheets for strategic decision making in the future. So thank you so much today. My name's Doug Haworth. Here is my contact information. Please reach out if there's anything we can help with. Thank you.